President Bola Ahmed Tinubu has signed into law 4 major tax reform bills that promise to overhaul Nigeria's tax landscape, ushering in a new regime set to take effect from January 1st, 2026. The presidency says these laws are expected to transform tax administration, enhance government revenue, and create a more investor-friendly environment. At a brief but symbolic ceremony at the presidential villa on Thursday, President Tinubu gave his assent to the bills in the presence of high-ranking officials, including leaders of the National Assembly, selected governors, cabinet ministers, and key aides. The 4 bills include the Nigerian Tax Bill, the Nigerian Tax Administration Bill, the Nigerian Revenue Service Establishment Bill, and the Joint Revenue Board Establishment Bill. Let's break it down bill by bill to understand what this means for Nigeria and Nigerians. 1. Nigeria Revenue Service Establishment Bill. First, the Nigerian Revenue Service, or NRS, has officially replaced the Federal Inland Revenue Service, FIRS. But it's more than a name change. The NRS will now have the sole responsibility of collecting revenue previously handled by several other government bodies, including the Nigerian Customs Service, the Nigerian Port Authority, NPA, the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, and NIMASA. The goal: to streamline revenue collection, reduce duplication, and plug financial leakages across federal agencies. 2. Nigeria Tax Administration Establishment Bill. The second bill, which is the Nigerian Tax Administration Bill, focuses on how taxes are managed and administered. One major highlight: the creation of a new office of the Tax Ombudsman. This office will ensure taxpayers are treated fairly and tax disputes are resolved within 14 days. Also under this bill, businesses can now request advanced rulings from the tax authorities and expect responses within 21 days. Tax refunds will be processed within 90 days or 30 days of VAT refunds, with the options to offset against other taxes owed. There is a 6-year statute of limitation, and if the tax authority doesn't respond to objections within 90 days, the case is resolved in favor of the taxpayer. This particular bill is all about building trust, accountability, and faster responses to tax administration. 3. Nigeria Tax Bill. The third bill to be signed is the Nigerian Tax Bill. This is where most of the financial reliefs and exemptions are captured. For homes and individuals, anyone earning 800,000 naira or less per year is now fully exempt from the pay-as-you-earn pay tax. Personal income tax of 25% only applies to those earning 50 million naira or more annually. Stamp duties no longer apply on rent below 10 million naira. 0% VAT now applies to essentials like food, healthcare, education, electricity, baby products, and sanitary towels. Value-added tax exemptions also cover transportation, fuel, compressed natural gas, and renewable energy. For businesses, small businesses with annual turnover up to 50 million are exempt from company income tax. Medium and large companies will enjoy a reduced corporate income tax rate of 25% down from 30% starting 2026. Startups can now deduct business expenses incurred up to 6 years before they begin operations. Remote workers and digital nomads now have clearer tax rules. Digital assets like cryptocurrency will now be taxed with no double taxation, and losses can be deducted. And finally, this bill introduces a development levy of 2 to 4% to support agencies like the Nigerian Education Loan Fund, NEL Fund, Tertiary Education Trust Fund, TET Fund, National Information Technology Development Agency, NITDA, and National Agency for Science and Engineering Infrastructure, NASENI, helping fund education, innovation, and national development. 4. Joint Tax Board Establishment Bill. The fourth bill, which is the Joint Tax Board Bill, strengthens the role of the Joint Tax Board, which now gets formal recognition and legal backing. Its mission: to coordinate tax policies across the federal, state, and local governments, ensuring uniformity, fairness, and cooperation. Key points include harmonization of taxes across multiple agencies, elimination of multiple levies, and efforts to outlaw roadblocks and cash payments that place burden on businesses. This bill ensures that all levels of government work together rather than against each other to achieve tax goals that benefit the entire country. As Nigeria prepares for this shift, all eyes will be on how efficiently the government rolls out this tax transformation and whether it can live up to the promises of boosting national income without stifling enterprise.